Hello everyone, a warm welcome in another research video. Today, we'll be talking about Gabriel India, a leading manufacturer of suspension components for the automotive industry, a part of ANAND Group. But before that, let me introduce we are PA Wealth, a SEBI-registered investment company. We offer stocks, PMS, AIF, mutual funds and startup investments. Every week we upload a video on different companies, mutual funds and financial topics. Subscribe our channel to not miss any future video. Let's get to know about the ANAND Group. ANAND Group was founded by Deep Sea Anand and named after the founder. The company manufactures automotive components. Group is also a global leader in manufacturing world-class systems and components for the automotive industry. In addition, the group also offers experiential luxury through the hospitality vertical, Sujan. Moreover, the group has 20 companies spread across 60 locomotives in India. Additionally, it has 13 JV companies, including 7 technical collaborations and employs over 14,000 people. Meanwhile, currently the group has a total turnover of $1.4 billion. Let's discuss about the business segments of the company. First, 2 and 3-wheelers. In this company manufactures shock absorber and front forks for bikes and 3-wheelers. Company has a market share of 32% in this segment and its top 3 customers include TVS, Yamaha and Bajaj Auto. Second, passenger vehicles. For PVs, company manufactures adjustable shock absorbers, rear shock absorbers and strut assemblies. Company has a market share of 23% in passenger vehicles and its top customers include Maruti Suzuki, Volkswagen and Mahindra & Mahindra. Third, commercial vehicles and railway. Company manufactures axle, cabin dampers and dampers for diesel locomotives. In railway segment, the company has also expanded its product line to serve all segments of Indian Railways including Vande Bharat Express, for which Gabriel India is the only qualified Indian supplier. Company has a market share of 89% in this segment. Fourth, aftermarket. It is the only company present in all segments of the market, namely TW, PC, CV and railways, and also has completed 4 IT enablement projects. It manufactures shock absorbers, tire and tubes, coolants, suspension bushkits and many more components. Recently, company has formed a joint venture agreement with Inalfa Sunroof System Limited. Additionally, the company has made an investment for manufacturing and delivering sunroof system is $22 million, in which GIL shall have 49% stake in the JV partnership. Moreover, after the completion it will have a capacity to produce 2 lakh sunroof per annum. Company expects to start its production in January 2024. Demand for sunroof for SUVs is almost approximately 70% to 80%. However, as per the company, the market size for sunroof is almost 4,500 crore rupees with approximately 35% penetration. Moreover, company is looking for 40% market share in this segment. Let's discuss about the revenue segments of the company. As you can see in the chart, passenger vehicles contributes 24% of its revenue, commercial vehicles contribute 13%, 2 and 3-wheelers contribute 61%, while rest 2% comes from trading of goods. Now let's check the channel mix breakup of the company. 83% of the revenue comes from OEMs, 13% from replacement market and rest 4% comes from exports. Now we will discuss the shareholding pattern of the company. As on June 2023, in company promoters are holding 55% of shareholding. Foreign portfolio investors that are FPIs are holding 2.7% of stakes. Further, mutual funds shareholding is consisting about to 10.7%. Other institutions are holding 0.3% and public are holding nearly 31.4%. Let's discuss about the executive members. Mrs. Anjali Singh. She is the chairman of the company. She serves as the executive chairperson of the group supervisory board of ANAND. She did her bachelor's degree from the prestigious Central Martins School of Art and Design in London and did a course in business management from the University of Westminster. Mr. Manoj Kolhatkar. He is the managing director of the company. Joined ANAND Group in 2015. Prior to ANAND, over 29 years of experience in leadership roles at DuPont, Tata Consultancy Services and Ballarpur Industries Limited. Mr. Atul Jaggi. He is the deputy manager of the company. He has over 22 years of experience in core functions like maintenance, supply development, corporate quality, manufacturing excellence. Mr. Jagdish Kumar. He is the non-executive director of the company, having a vast experience in leadership and board management roles across the Asia-Pacific in a career spanning over 33 years. Let's discuss the cost structure of the company. Raw material expenses account for 77%, while employee costs stood at 6%. On the other hand, power and fuel costs stood at 1%, selling and administration expenses stood at 5%, while other expenses stood at 3%. Now you will know the financial parameter of the company. Company has grown its revenue at 9.83% in past 10 years, while PAT grew at a CAGR of 13.27%. Moreover, company is currently debt-free. Management key points. In PV segment, its market share increased from 23% in FY22 to 24% in FY23. Even though it has maintained leadership position in electric two-wheeler segment, but its market share has come down from 80% in Q4 FY23 to 73% in Q1 FY24. This is due to underperformance of few clients due to reduction in FAME subsidies. Further, company is engaging with electric car players to expand its presence in EPV space. Company is targeting to increase its export sales from 4% to 10%. Moreover, its goal is to derive 50% of the energy needs from renewable sources by 2025. Company has also received new programs like for Jimny and electric Citroën C3. Opportunities. First, shift towards electric vehicles. According to a report published by International Energy Agency, India is projected to emerge as the largest market for electric vehicles worldwide by 2030. Second, customer preferences shift towards premium products. With the rising income level, the demand for premium passenger has also significantly risen. Third, infrastructure development. It is the key focus for government worldwide, with substantial investments being made towards constructing essential components such as roads, bridges and highways. As a result, there has been a significant increase in demand for commercial vehicles. Fourth, government policies. The commercial vehicle industry is likely to experience a substantial boost by implementing government policies, including incentives tailored to encourage the adoption of electric vehicles, scrappage programs and regulation regarding load carrying capacity. Let's discuss about the strengths and weaknesses of the company. Strengths. Healthy market position with diversified segment base. Gabriel is one of the largest players in the automobile suspension component segment in India, with presence across OEMs and aftermarket and export segments, through more than 12,000 retailers and 600 dealers in 6 continents. Weaknesses. Susceptible to inherent cyclicality in the auto industry. The automobile industry is highly susceptible and sensitive to macroeconomic events, which also have a strong bearing on consumer demand. Customer concentration risk to revenue. Top customer accounts for 24% of revenues and top 5 customers account for nearly 56% of revenues. Hence, the performance of Gabriel India highly relates with the market share, production volumes, and the ability to adapt to shifting trends of its customers. That's it for today. Thanks for watching. Hit like button, comment your queries and share it with other investors for their benefit. Subscribe our channel for latest stock research updates. Don't forget to press the bell icon.